Hello and welcome to another update video about Natgas. Natgas has not yet really started a more aggressive wave 4. I mean, don't get me wrong, the forecast is still for another low. We've seen one more low today, but I made you aware that at any point now this fourth wave can start. And this continuous, decline makes me wonder if I need to make an adjustment to the micro count so that we get a better, let's say, idea of where we actually are. And I think, yeah, maybe a small adjustment would be helpful, but I don't need to change much. It's just probably the case that this fourth wave is not yet due the way this looks. Again, the focus is on lower against $2.38. So as long as we stay, or, if we break, let's say, if we break above that level, that would be a signal that this immediate move to the downside at least is over. If that means we are really bullish, we will have to see. But for now, the focus is on lower more directly. And yeah, let's take a look at the microstructure here. Again, the idea is that a larger degree fourth wave topped here on the, what's that, the 9th of January. No change there. Then we have a wave 1 to the downside, a wave 2 to the upside of this fifth wave down. That isn't changing at all. So let me shift that in case I need to adjust it. I intentionally did not change the labeling before the video because then it can be difficult for anybody to follow who followed previous updates. Now, and here I would like to introduce a change because I labeled this as a third wave down, and I think that is reasonable. But given the lack of any wave 4 here, that is of any substance, I'm thinking that it might be wise to shift this all by a wave degree. And so let me just delete that ABC. And the idea is that this third wave here has to go down where this fifth wave is sitting. And then I'll show you the micro as well. And this fourth is probably some kind of a triangle. We will label that together. And then, yeah, I think we had here just sort of hidden another 1, 2. This could be a 3, but then we had a very deep wave 4, but no overlap with 1. And then possibly here. Yeah, let me change the color to white. So this fifth wave bottomed on the 31st of January. This swing low that was formed at $2.04, that was then the larger third. Then probably this fourth wave was some kind of a weird WXY. I mean, again, very exotic counts, but I think this makes sense in the absence of anything that makes more sense. WXY in white. So the WXY is a complex corrective pattern. And this Y wave might even have, formed a triangle or something. So, and then the idea is that, maybe we're now in this fifth wave of the third. Like that allows me to calculate a target as well. I'll do that in a minute, but then we should still get another 4, 5 afterwards. But it means that probably circle wave 3 hasn't finished yet. I would also have to adjust the resistance area based on the latest low, but that doesn't change much. I'll shift it to the right. So, and that allows me now to recalculate a possible target for wave 5 of 3. Remember that I sort of already gave you some kind of a target area here, generally for forming the overall low point, long-term low between 181 and 198, but that's sort of more like the looking at the bigger picture. If we take a look here at the micro, just need to focus on, in terms of target, for this fifth wave of circle wave 3, what we can do, we take the length of waves 1 to the end of 3. Then we go to the high of the wave 4. And the very first level that actually gets relevant is the 38.2 extension at $1.90. So we'll see if we get there. What I need to do, just want to keep the ones on there that are, that are typically common. So yeah, basically here, this is the immediate target range for the fifth wave of a third. That's between $1.90 and $1.79. Let's see if we get there. I mean, we've broken below the last low. We're actually trying to break to the downside of the wedge. Don't get me wrong, I'm not telling you we definitely get there, but I would, I mean, it is reasonable to assume that it's trending down into that direction, especially as long as the $2.10 level, which is the wave 4 high, isn't broken. So against that level, the focus can be on lower. If that level breaks, that would be a signal that circle wave 4 has started to unfold. I mean, what's the minimum expectation for such a fifth wave? Well, right, to go below the low of the third, which it did. So again, we're still in a situation where at any point that circle wave 4 can start, but it would be reasonable to expect a little bit further downside. Then again, these wedge patterns, it's not broken yet to the downside, and they usually break to the upside. So I'm thinking, yes, we've made another low, but it's still respecting really well the trend line. So we haven't got a sustained break below the trend line. So I want to see that first before really being convinced that we trend towards $1.90 next. I think that's sort of something to keep in mind. But yeah, even if that fourth wave is starting, it still wouldn't change the structure here. Start of the fourth wave now, and the parameters are defined. If the third trends a little lower, then we have to shift it down a little bit. But then I would still like to see another fifth wave in the end. Yeah. So that's sort of what the parameters at the moment. Only a break above $2.38 would suggest that something more bullish is going on. I think the probabilities, they're already starting to shift above $2.30. There is some structural resistance here at $2.10, $2.13, and then $2.17. But yeah, it's so far still bearish. The trend hasn't changed yet. Even a rally in wave 4, I wouldn't call that a trend change. Only 5 waves up, 3 waves down will be a signal that a more substantial low is in place. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.